Hi everyone, this is just a continuation of our topic regarding breach of contracts according to PAS 1. Before we start, I would like you to pause the video, then you can resume playing the video for the continuation of the explanation.
Okay, let's continue our discussion. According to PAS 1, covenant is a requirement or restriction in a loan agreement that a borrower must comply to maintain the classification of debt as non-current. As a general rule, if a long-term obligation becomes due and demandable, the liability will now be classified as current. But we have here our exceptions. There are two conditions that should be fulfilled. First, at balance sheet date, the grace period have been provided on or before the BS date or the balance sheet date. And the creditor agreed to give at least 12 months of extension after the end of the reporting period. Let's go back to our problem. The requirements are to compute for the current portion and the non-current portion. Highlighted in green are the liabilities that are normally classified as current liabilities. We have here the trade payable, the notes payable, and the interest payable. Kindly take note that for the interest payable, sometimes if the interest payable is related to a long-term obligation, or let's say for example a bonds, then not all interest payable are classified as current. But normally, if the problem is silent, then interest payable is a current liability. Then we have here a mortgage notes payable amounting to 2 million and the bonds payable amounting to 4 million. Normally, they are classified as non-current liabilities. Let's read further. It says here that the bank notes of 8 million is a two separate notes payable. The first 3 million is payable on demand. Therefore, if we will be computing for the current liabilities, only the 3 million portion will be classified as current liability, and the 5 million, since it has been refinanced, then it is classified as non-current liability. Then we have here our mortgage payable. Generally, it is a long-term payable or a non-current liability. ABC company failed to its covenant, which is to make monthly interest payment. So that's why if we will go into understand our accounting standard, the AS1, this will make the mortgage payable or the mortgage note a current liability. Then we have here our bonds payable. It is issued on June 30, 2011. Our balance sheet date is December 31, 2020. Then, if we will follow the PAS1 12 months after the reporting period, then the bonds payable will now be classified as current liability. So, if we will go into add it up, accounts payable, notes payable, interest payable, mortgage, note payable, and bonds payable, we will have a total current liability of 15,650,000. Then for the non-current liability, it's only the 5 million portion of the notes payable to bank. That's all for today. Thank you all for watching.